Thank you. Good afternoon. I think the session was originally planned for 4:20 and then got preponed, but apparently it was supposed to be 4:20. So we are 5 minutes early for the session. Anyway, thank you all, and thank you esteemed speakers here on the dais. I think the topic Rajeev and I were talking is a little bit more futuristic, I guess, in nature, and that's the whole point of being in this particular forum, where we want to look at what future that we should build for the space that we operate in, microfinance specifically. So I'll just start off with a bit of a context that I thought would be relevant to lay the discussion forward. See, when microfinance started way back, of course, in an Indian context, it is kind of mid-90s in the real sense, in a commercial manner. We did not have a lot of enablements. Like, for example, even we didn't have a proper identity in that sense, right? Sasidhar came in later. We didn't have phones. People didn't have much to communicate except, probably physical touch and maybe an STD call once in a while. There were no internet, of course, that's the given. There was no real bank account also for these customers those days, right? And there was also no credit bureau, okay? So there were literally a very blank slate on which microfinance started. And hence a model was created to overcome some of these very traditional requirements that a bank or lender would want. Hence this JLG and all the concept got discovered or invented. Of course, we discovered it from other countries also and adapted to our context. But that model got created given the constraints that we had those days. But as we carried on, we know that almost all these things are today available. There is an identity, or there are multiple identities. There is a credit bureau, which is very reliable. Of course, there are some new to credit customers also, but still majority. There are phones, of course, majority of the customers, some may not have them. And we have, of course, internet, which is an easy mode of communication. So we have seen a tectonic change in the whole landscape of our customer lives, right? However, a lot of older concepts and the models continue to be used today. They are useful. The model has worked, and last 25 years we have, I think, scaled multitude times, and one cannot debate the relevance of the model that we have applied for such a long time. But the question in mind is, with this changing landscape, with changing customer behaviors, with changing world around us, what is it that we imagine the microfinance would look like going forward if we were to leverage all these benefits that we today have, which we didn't earlier? I would maybe start with Vivek. Vivek is one entrepreneur who started with the thought process of bringing digital to the doorstep of the customers. And I know he was the first one who actually experimented on the cashless collections through Aadhaar Pay. So I would like to ask Vivek, how would he, lay down a future microfinance model with all these enablements in place today?
Thank you so much, Sasi. I think I have seen different pieces of microfinance in the last 20 to 23 years of journey. It was almost less paper and cash model in early days, when we were just having one basic information from the customer, basic details of the customer, and it was more about having the discussions with the customer, discussion of the product, discussion of the process, interaction with the customer, understanding the customer better. And from there, gradually we have shifted to more technology piece now, and where it is almost paperless, cashless microfinance operations are there. Chat has reduced almost from 7 days to 7 hours. The interaction with the customers, definitely, that is the only piece which need to be tightened at this particular time. With the use of the technology, we cannot lose the touch from the customer. We cannot lose the interaction with the customer and their requirements. But microfinance has changed a lot in the last 20 years. And even the customers have evolved to the different level. Their requirements are nowadays different. And traditional JLG model, it has its own strength. But understanding the requirement of the customers, and whenever the money is required, how we are able to support them. The entire sector was started 25 years before, 30 years before, mainly in India. The concept was the first what contribution we were doing, we were eradicating the money lenders from the ground. The the charges were almost 10-15% per month, and microfinance companies were able to play the impact, and ultimately we have played our role at that particular point. First means the way poors were in their traps. But what we are doing now, we are having one JLG product, but the technology had its own strength. If we can underwrite 10,000, 15,000 additional loans while giving loan in the first cycle, and that can be at their need, their life cycle need. If there is some medical emergency, still they are going to the money lenders. If there is still some basic requirements are there in their life, they are still going to the money lenders. Still that mission is not completed. So that is the way to understand your customers, to understand your team. But on the other side, technology has given us that strength, how the accurate underwriting will be there, how the future requirements of customers can be mapped today, and when the requirements are coming, we are ready to serve that. And even we are able to underwrite the risk in developing a particular product, in disbursing a particular loan. And I think I have seen the companies who are disbursing even within 2 hours, means even they are having their own capacities, but customer interaction, I think that should be maintained, keeping technology at the top, but on the other side, human relations cannot be ignored in entire process.
So the touch piece is still very critical. So let me come to, I think we have a very good mix of panel here. One is an NBFC, MFI, a bank, and a BC. So I think we can't get a better mix. We missed an SFB in the process. But so Rajeev, I think while you build, of course, you built microfinance book through multiple methods, but you also have other products, right? And you believe that MSME is a better sort of an entry point for this kind of a customer base. There's a lot more data, a lot more. So can we look at or imagine some of these benefits that we have been able to derive in MSME space? How much do you think would come down to microfinance level, maybe sooner, later? How do you imagine the benefits that we have derived in other spaces using technology to be now applied to microfinance?
So Sasi, I would say this is not better, but I think there are many appropriate products. So I would echo what Vivek said. So first of all, I think the digitization journey for the customer, which means reduction of time, processing costs, as well as for your field force. You see, the other thing which we've missed out is a very high human intensive endeavor, and some of it is also attritions are very high. So it also helps us put a little data points and ensure that policies, practices are as per our requirements. I think there the technology and new tools have helped. I would say that, again, you know, in our organization we say high tech but high touch. Okay, both have to go together. And therefore the endeavor is to find that golden mean, that you don't lose sight of that. So the way I see it, that many of us went into microfinance for operational reasons, because giving small credits was not economical from an OPEX perspective. So, and also that because there was this social goodwill, joint liability, and that was a very key part of how the business developed. I'm not saying the social construct has gone away, but it has certainly weakened over time, especially post-COVID, when actually in-person during COVID meetings were very few. This has become a lot rarer. So we also sense that as the customer has evolved, customer knows about these things. In fact, the customers know enough about their own lives in terms of what credit score they have, what cycle they're on, as much as we do, because there's a lot of education. You need to start segmenting customers from your client base to see what is more appropriate. And sometimes you can do a direct lending to them for a very specific purpose. Especially in JLG, it's very tough to identify what is exact end use. I mean, end use is generally replacement of other loans or consumption or some small capital purchase, dairy, or running a shop. I think today we at least have some start of some data which we've captured, and I wouldn't rely 100% on data because this is still early days, okay? But if you have a strong field force and you have a very good analytical engine at the back, you can start. So when we ran some credit bureau scrubs on our customers, we found 40% of them had other banking products. And it was quite, so when you run it as a JLG product, suddenly you just see the customer in that, but the customer has got a gold loan, a two-wheeler loan, I wouldn't call a housing loan, but some room improvement loan. Some of them have a credit card. Okay, I mean, it was quite a revelation. Obviously, one can't jump into it, but I think that was kind of a point of opening for us. That can we take some customers and test things out. So we've started doing some small, MSME loans. I wouldn't call them really large, just to see how these things work. And there again, I think the important thing is to take the behavior they've had with you and obviously the bureau, overall family income estimation, how many loans do they have, and see what you need. And there, actually, your frontline guys and your credit guys need to see what the workplace is, what is the customer going to use it for. So while a lot of selection can be from your database and your prior behavior, it still warrants a very sound in-person visit and maybe recurring visits. So when we do other MSME loans, we have a beat. Depending on the size of the loan and the kind of collateral, we run that beat. So this also has to be done that way. I think early days for us, but I think this is something we believe. It's also going in the direction where many of our customers saying, I don't want to be joined in a group because my needs are different. Okay, and when you do, center meetings and they come take you aside and say, sir, मुझे ज़्यादा लोन चाहिए क्योंकि मेरा business different है. So I think you need to address that. And I think today at least we have the understanding, we have the tools, we have the data, we have a certain branding in the market that we can start attempting this. And even the customer is well informed. So I think that makes a lot of difference. So we are seeing these things evolve. My sense is over the next few years, this will start happening more and more because all these customers have aspirations, they have needs. And if an NBFC or a bank, which is already giving them the entry level, if you can't satisfy that, then you're just leaving business away and perhaps increasing your risk. In my view, if they go elsewhere and you're not disciplined about it, increases your risk.
So I think, Rajeev, I think you've hit on two important points that I wanted to actually provoke on. One is it is a high-touch business. And I believe that in today's world and you also said that JLG is not gone but got diluted. If we put these two things together, I think high touch is going to be a problem rather than a solution. Because loan officers at one point in time, used to make it, it was easy for them to go to a group meeting and pick up cash and deposit back and 95% of the work is done and 5% they follow up. Today it is maybe 85% of the money is coming in groups, but remaining is all door-to-door follow-up. Hence, the touch is becoming a lot more challenging. Hence, the attritions have gone up. And actually, the people interface is creating a lot more friction with the customer. And hence, we're seeing customer backlashes also in certain cases because the loan officers don't necessarily behave as well as others. So, to Ganesh, I think Ganesh is a very, very operationally, savvy, obsessive person. I have seen him for a long time that he, gets into details of everything. And he was showing me one data today also how well or not our loan officers are able to visit these customers when the loan goes one day overdue and beyond. So, Ganesh, do you see a possibility of what I think Rajeev just alluded to it is segmenting these customers now, because we don't segment microfinance customers. We treat everybody with the same brush. And hence, I think the problem is because we are wasting a lot of time with good customers and not spending enough time with, I would not say bad customers, but not so easy customers. Do you see a point in looking at that now, using whatever digital technology is available, and make sure that the loan officers eventually touch all those necessary customers they should and not necessarily everyone? Do you see any benefits of productivity and efficiency coming from there?
Yeah, firstly, thanks, Shashi, for this opportunity. Before coming to your point, I just want to draw a parallel. Since you told me that I'm an operational guy, so we talk local, we talk operational. Let me take you back and let me tell you what was microfinance in 2007-8. to give you a sense of what it is, okay? I mean, since we have come a long way now. For every branch, we used to have an operation person, back-end operations, okay? And then we do a sourcing. And there used to be a long application form, 2 pages, 3 pages, very simple. And the customers have to sign, a couple of signatures. And with a sign means for them, supposing my name is Ganesh Rao, and I come from a village called as Ullal. So my signature is, either I sign Ullal Ganesh Rao, or I'll sign as Ganesh Rao. And just imagine writing this full name. Writing the name is a signature. So they used to write it a couple of times, 4, 5 times. And that application form will come to my back office. And when it comes, these 3 signatures don't match. They are different. The application is sent back. Sir, match nahi ho raha. And the story goes on. By the time you get the application signatures right, it used to take 7 to 10 days. So we need to innovate, right? We didn't take then. You know what we did? We will take a photocopy of the application, ask the field officer to write the application in the photocopy, and only take the signatures in the real application form. Courier the application form. It comes to the back office, and we used to hire college students. I'll remind you, college students, post 5 o'clock, they'll come and write the application. The signature is already there. That was the innovation then. My biggest headache was not giving the money, was not taking the money. How to complete this application and KYC. So from there, and for every back office, for every branch office, we had 1 back office person. As we added branch, we occupied 1st floor, more branches 2nd floor, more branches 3rd floor. At some point of time, we are operating on 4 floors. And come to 2024, I don't even need 1 floor. I don't even need 1 floor. There is no back office. An employee of mine can go to the customer, draw an application on e-sign, completely give the sanction based on BRE, on a bank aggregator platform, open an account, transfer the money, and through an e-sign, complete the transaction. If I want, minus the CGT GRT, which Vivek was talking about, I can give the microfinance loan in, 10-15 minutes flat. So that is a journey we have come, okay? I mean, it was not so simple at all. What we say today, eKYC, e-sign, platform, BREs, CBs, what not all, the kind of tools available. We had nothing when we started. Like what Vivek was mentioning, it was all paper. You go and talk to customer, kitna paisa chahiye. If you feel that you can give, you give, just give, that's it. KYC, what KYC you are talking about? A municipal councillor can write in a letter and say, this is your address, that's it. That was a KYC in those days. Who had Aadhaar card then? So that way we have come a long way, okay. Having walked this journey, I think we also build data. Now data is available. Now based on data, what you are saying is that we can segment them. Not only that, I think probably in COVID times, we had this something called as customer visit, and that was not possible. So that's the time, we got into something called a digital PD. We were early ones to do this. So what happens is that we digitally capture all the customer credentials, the house images, things like that, lat long, whatnot. And today we are able to track the customers. Okay. Attrition, another challenge. And that doesn't bother us because, we have already the address details on a lat long, so anybody can visit the places. So, I mean, that way I think the technology has enabled us, but coming to the point only on one side of the business. Okay. As far as the loan processing is concerned, it's cut short. What used to happen, say, in 10-15 days is now given on flat 10-15 minutes, or if you want, you can instantly give a loan. But on the other side, I think our problems is all about getting the money back. To the extent of giving the money, I think the problem is solved. But
fully,
taking,
I guess, but
to a certain large extent, I think
yes.
we can give the money flat. But I think taking back, it's not really working the way we want it to work. I think it's a long way to go. Segmentation, yeah, it's possible with all this data, you can really do that. But unfortunately, microfinance ka asul raha ki one size fits all. That's our mindset. You decide on a loan product, 50,000 dena hai, sabko de do. It doesn't really matter whether you are giving customer to A or B, income level kya hai, it really doesn't matter at all. I think we need to change that mindset. Probably then we can do something. At this point of time, it's all volume game. I don't see any great innovation there in terms of segmenting the customers.
Okay, so you seem to have sounding like a bit not so hopeful about that, but I am. I think there is, I mean, in our own ways, we may be doing that also when we do our cuts and slices of, customers, good and not risky and easy customers and all. We apply different doses of touch or tech. But coming to Vivek, I think just taking that, extending that argument a little bit on, is digital that way overdose of digital, let me put it a little bit quote unquote, going to cause any challenges in terms of even questioning the tenets of the model where the group, for example, is the very core to microfinance? And Rajeev alluded that there may be some dilution happening, but still majority of it works. So do you see if we go too far into digital, is that going to actually challenge the those whole social structures and the aggregation model that we followed so far? Of course, risk also is a big factor there. So do you see risk going up, and hence we don't want to really go that far? Is that also a challenge?
I think we don't have any choice. Digital is digital, and we have to adopt it, we have to accept it, and we have to build our process in line of digitization. Microfinance JLG model is just a nursery of financial inclusion. And how we upgrade our customers and upgrade our products, that is the real innovation missing in the microfinance sector. The group earlier means 15, 20 years before, the group size was almost 15, 20 members. Weekly collections were there. Now what is happening? Group size is 4, 5. Monthly collection is there. The stress within the group is increased to 15 to 16 times. That cannot be solved with digital. That is just a actual underwriting of the customer, actual understanding the cash flow of the customer, and that comes with the with more detailed analysis. Means it is it may not be called as a short-term personal loan, but it can be a nursery of the financial inclusion where the loans up to 50,000-60,000 are given for a period of 1-2 years, and gradually they have paid and their performance is there. And now it is a time to, as you have rightly told, that the segmentation is required. Which type of your customers are going to be next level of the pyramid? Maybe individual business loans are required for them. Maybe a separate type of other products may be required for them. But digital approach is going to help in segmentation, help in accurate underwriting, help in reducing the TAT, help in fixing the right KYCs, help in reducing the paperwork and everything. So we cannot go away with the digital, but at every time we have to fix that for which customer the touch is required. And when the customer has elevated to next level, then touch and technology both will work for time being, and for the next level, only technology will work and no touch is required at some point of time. So we have to design the model in such a way.
Yeah, so Rajeev, I think you kind of laid down that possibilities, but did also caution. But do you see we have seen this whole conference is about how things are being innovated, how future is being built in the financial services space. So do you think there is any, I think you collaborate a lot with fintechs and tech companies to digitize your processes and products. So is there anything that is being done in micro space? I would not specifically say microfinance, but micro enterprise and annual loans. Is there any collaboration that possibilities that we can look at? Because as lenders, we may not be innovating on tech side, but there may be tech innovations that we can adopt and borrow. Do you have any? Can you throw some light on that aspect?
Yeah, so Sasi, I think I'll say that little higher ticket sizes, it's still we go through a anchor-led model or a supply chain-led model or a cluster model. We've done a few of those things with partners. Also, I think because many of our customers are now also consumers of digital-first products. I mean, so it's very interesting that many of them actually have have enough and more things happening the way it's happening to us. And I think this is only going to keep increasing. We are trying to figure out if there are other data strands which one can leverage to reach some small businesses, which we could not on our own because the go-to-market OPEX was very high and you didn't have enough knowledge about the customers. So in the microfinance area, it's still our people. It's still our back-end data to figure things out. But in many other areas, we are so. For instance, if now with the rooftop solar mission, which is very ambitious, many of these areas will get a rooftop solar, and it could change the way you start looking at them. How do you work with some of those guys? And many of them are actually partners of us at the wholesale level, to actually go into certain markets and see what you can do to finance some of them. So we are experimenting with 2-3 of them. I think early days, I cannot say that they have reached a level and scale where we can roll it out. But you need to keep trying, because I think the one thing we've realized is that our customers, both in the microfinance and MSME, are changed. I mean, you cannot see them with the eyes that they are capital deprived, they don't have information, they don't have the necessary tools and technologies, and they don't understand what data and scores are like. They do. Now it's for you to figure out how you reach out to them, what's your knowledge about them, and what kind of risk you're willing to take at the initial stages. So a few experiments have started. I think, early days, like I said, we'll see how these things go, but enough and more avenues available to do it.
Yeah, I think look forward to, that experiments to scale up and learn from them. So Ganesh, I'll push you again a little bit. I think you all have laid out what digitization and digitalization has done to the whole process efficiency, right? We have moved a lot in that. But I'm also interested in transforming the lives of the customers from their experience perspective. In my opinion, that has not changed much, right? We still deal with sometimes not so pleasant loan officers, right? And there are situations where we deal with and leads to a lot of challenges. So do you see an application of, data and AI, ML technologies, perhaps even stretch a little bit on the Gen AI side of it, that the human friction, that is still there in my opinion, human is friction, whether we like it or not. How do we solve for that by using AI as a potential alternative to human in some of these customer interfaces? Our only interface is human, but can we actually replace some of the interfaces with digital for a customer itself, so that there is lot less friction and lot more I think communication can increase. If you have digital communication with the customer, you can meet them 10 times digitally than 1 time physically. So do you see application of technologies like that to help customers actually work with us a lot more seamlessly than working with loan officers?
Yeah, I mean, honestly, to a very large extent, yes. We have been experimenting with many of the activities. Firstly, I think we'll have to slice all the activities, right from sourcing. Today, a traditional microfinance field officer has to go to a village, identify a village, go to a customer, form a group, process the application, so many activities. And then you have traditional training programs, financial literacy programs, then you have something called as GRT and things, so on and so forth. So what we are trying to do is that which are the activities which can be replaced by these automation or by these MI or EL. I'm not saying we will take the entire journey one shot. I think we'll need to slice it down and then see what can be minimized, okay? I think what we have done right now is the credit assessment, which was done by a field officer. I think we have moved to a digital office, which is a centralized office. It's a centralized office talking to a customer, okay? So it's not the field officer doing. Sourcing is one, which I think can be done to a very large extent, because huge cost, I think a substantial part of the OPEX is the sourcing cost. I think that can be easily replaced. The CGT GRT, I mean, it's a funny thing, CGT GRT, everybody has its own, there is some, of course, every entity has got a content, but then when it is communicated, it's its own story. So to a very large extent, we have digitalized that. It's a video now, a very interactive video, which we send it through either, if the customer has got a smartphone, we send it through WhatsApp. Otherwise, then we play the video there in front of the customers. So I think a substantial part of the journey has been minimized, okay? So I think the first part, when I'm saying the first part is it's all about giving the money when the customer needs the money at the right time. I think that activity, I think, if you ask me, yes, I think I'm game on. I see that happening very soon, sooner than faster. I think that will happen quickly. But on the collection front, it's slightly tricky at this point of time. I don't deny that. For example, there's another model which is called a SAG model, where the customer has to come and give the money to the bank. Mostly it is not collection driven. It's something which, self-induced. Even there, I think we have seen a collection percentage of 94, 95%. We are at 99, they are at 95. Not much if you see the gap between the SAG model and JG model. There is an option there. There's some work needs to be done. But we are so fancied, we are so obsessed with this 99%, probably that is holding us. Sooner than later, I think that should happen. As far as understanding the customer, like in somewhere you mentioned about customer, I'll narrate a very small incident what happened recently. If you go to a village and ask a borrower, when she wants a loan, okay, when I go as a lender, क्या चल रहा है गांव में? अरे बहुत बढ़िया है. So how's your revenue? यार first class. अभी तो फसल निकली बचा है. My son is just completed the graduate. He's got a job for 25,000. अब हम घर इसको तोड़ के नया बना रहे हैं. And my daughter is just completing. I think she's going to buy a car. Oh, very good. Next time you go as a recovery officer. क्या बताएं आपको? What to say? सूखा पड़ा है. कुछ नहीं चल रहा है. पैसे नहीं है. Same customer. So it's very difficult to understand. I agree. It's so difficult to understand these customers and to completely automate at this point of time. Yeah. But I think it's a journey.
Yeah.
But on the first part, I completely agree. It can be done. Straight away, it can be done.
Super. So, yeah.
So I would agree. I think what we've done in terms of, we've just experimenting. I won't call it an AI bot. It's a little fancy name for a
Regular bot.
But it's multi-lingual. It's also very customer specific. We've just started that experiment. Initial soundings are good, but I don't know if you overuse it, it'll also lead into problems. I think the biggest thing is we can do all of what Ganesh said and more. I think it's just how you ensure that the people in your organization
Adopt to it.
not just adopt it. That adoption is done at the back end and by the CIO. How do they use it and how can you upgrade them? Because at the end of the day, I don't see a situation where these are all STP loans and STP recoveries ever. Okay, never happen. So the human element becomes even more critical. And I think my worry is that technology for itself is fantastic, our OPEX and our ability to dice and slice data. But I think the real challenge is the people who go there, and you cannot do without the people. How do you change the way of approaching them? And that is a tougher job to do. And I think that will be the thing we'll have to bother about, frankly.
Fair enough. So I see our MC walking up. So I'll cut my last question out and let the audience also raise some questions. I have huge challenge with what you mentioned, but we'll have a separate offline debate on that. STP, in my opinion, is possible, but we'll see what the audience have to ask and maybe take a couple of questions. Yeah. Reggie.
We talk about more the changes happened over the 2 decades. Now that we are seeing the Jam and then UPI and all these technology revolutions, how it is changed the whole the sphere of the space of the microfinance. Today we talk about ULI, Unified Lending Interface, which RBI Governor is introducing. How can microfinance be an early bidder for this? How that's going to change this particular business vertical?
Maybe we need to learn a little bit more about what ELI is actually going to be, but anybody has an answer for this?
I can only say that, the ULI actually aggregates a lot of data consent-based. I think in this situation is a little different. I would say that the data points we have are very few. This is not something we have 10, 15, 20 data points, the things which we have mentioned. Maybe down the road we will have a lot more. I think there are a lot of private data points emerging. So if you look at somebody who's running a dairy, now that will never come in a ULI. These are not public data you can access. So there are some public data, but a lot of it is your own understanding of the ground realities, private networks, maybe some e-commerce, maybe something which anchor supply chains could help you. I mean, especially at the top end. I have no idea, but we'll always get surprised by the way some of these platforms move.
Yeah, one more question, please.
Hi, Ashlesh here from Kotak Institutional Equities. Sir, just one question on the underwriting part. Is there a way to solve the income assessment problem here? Because although we have moved to digital tabs for the loan officer to fill the form and plug in the income number, is there a real way to do a decent enough income assessment?
I think through I think technology can help a lot in terms of underwriting of the loans, especially the income assessments. Because if you see, the area is specific, pin code is specific, and activities are different in certain pockets and certain areas. And some common logics can be built that in particular this village, if activity is like this, the income, monthly income cannot be beyond this limit. Some common points can be assembled and income assessment can be done. Means that potential is there. But even out of that, means there may be some exceptions, but area-specific income assessment can be done.
I just want to add one thing. Quick, it's time up. Yeah, we also do a digital PD. Okay, I mean it's a centralized office doing a digital PD, and when we do that silently, what we notice is that broadly the living condition, the house condition, we slice them into three pieces probably: concrete, no concrete, with wall, with no wall, with ceiling, no ceiling. The item seen, the consumer like TV scene, fridge scene, livestock scene, and so on and so forth. What you see. Okay, I mean that's where the machine learning can use that to a certain extent. We're still using that. Based on that, we try to grade customers ABC, and we build a surrogate.
Right.
You ask customer, he doesn't say. When you're giving a loan, he'll double the income. When you go for recovery, he'll minus that. Okay, that's a real story, a real fact. So surrogate is the best thing is what we are doing at this point of time. Yeah, he's got a livestock, yeah. You know what it happens.
Great, so the time is up, so sorry, we can't.
We can take another question,
One more?
especially
Yeah,
for anybody who has a question at the back side, please put your hand up. Even if anybody has a question from the front.
Anybody? Okay, good.
Hi, I'm Puranjay Mahapatra. I work for Setu, our digital fintech infra company. I wanted to ask this question on, a lot of new age fintech apps are coming and saying that we can do microfinance better, but obviously banking correspondents also have a role to play. So I would want to ask a question that, in this phygital world, which is probably what's going to kind of keep persisting, where is it that, we can empower the banking correspondents to do a better job? Any specific thoughts from the panelists?
So I'll just answer on behalf of Sasi and Ganesh because they have been our earliest partners now, almost 13 years. They do a fantastic job in the front end and getting us a lot of insights, and they're like 10 steps ahead of us in technology. So, but they can tell you exactly what they're doing, but I know both of them do a fabulous job in frontline technology and empowering their.
So I think the point you're making is about the touch point, right? That is more hyper-local in nature. How do we leverage them for making some of these, things happen? So that's the direction which I think most of us will get to. That's my view, is that a lot of things will be light touch, but more hyper-local, and rest of it will be taken over by technology. That's where the banking agents will become a lot more relevant in terms of becoming an advisor and a service provider rather than a transaction point. Now they are acting as a transaction point, cash in, cash out, but going forward cash becomes digital. Then there is a lot more engagement and cross-selling and many other services that an agent point can do, which will enhance the whole revenue stream, and the customer experience may become better by having this human interface, which is actually now doing a lot more than just transactions. That's how I see it going forward from a banking agent's capability. So time to wrap up. So thank you, very, very patient and great audience. Thank you, panelists. I think we couldn't have a better conversation. Every year we come back with this topic, I would believe we'll discover something new and we'll say that, hey, last time when I said that it wasn't possible, see, it's already happening. I would like to see that kind of a progress, and we would see that kind of thing. Every year we see surprises. So we'd like to also see that happening in microfinance, and one day STP microfinance is what I want to dream of. I dream of and want to see it. Thank you very much for your insights. Thank you all.
Please give our panelists a huge round of applause.